the back.
Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Happy Friday to you. Today we're going to talk our normal stuff, but we'll take a look at US, Canadian cattle and hogs, talk a little farm income, little restaurant performance index, a little jobs report. But to kick things off, let's recap what happened this week in the markets.
Yeah, Megan, this week on the cattle side, live fed cattle were about $2.60 lower this week. We did see feeder cattle markets generally $1 to $3 higher. On the futures side, October live cattle futures contract was down $1, and the October feeder cattle contract was actually up 40 cents this week. On the box beef side, choice box beef prices were down about $2.10. On the hog side, cash barrels and gilts were down $5.70 this week. The October lean hog futures contract was up $3.40, and we lost $8.20 on the pork cutout value this week. Thank you to much lower bellies as we finished the week was the reason for the lower pork cutout value.
It sure seems like cash hog numbers are pretty much just slumping right now.
Which seasonally we'd probably expect some lower prices through here. So maybe it's not too surprising, but it certainly is creating more financial pressure. So although, we would have talked about July and some of August with much better prices, we're kind of sliding back into that tougher, a lot more red ink coming on the pork side of the equation.
It definitely will be interesting to see what happens with quarterly hogs and pigs report, which we're just a few weeks away from at this point.
That is the big question right now. Are we going to see a lot of cuts? And I'll remind us, even if we just go sideways on breeding inventory, which might be my pre-report guess for the most part, that'll still get us more pork production into the next year. So we still could struggle as we're waiting on demand here to maybe get a little bit stronger.
Now let's take a look at slaughter numbers at the end of the week. How are we looking for cattle and hogs?
Yeah, so USDA tells us for the week ending September 2nd, a run of 629,000 head of cattle this week. That's 3,000 head more than we ran a week ago. Perhaps a little pre-holiday runs here, accounting for the higher numbers, down 13,000 relative to where we were last year. On the hog side, a run of 2.388 million head this week. That is 107,000 head lower than a week ago, but we had a big run last week. It's 18,000 head above where we were a year ago.
When we take a look at those numbers year over year, how are things stacking up?
Yeah, so down 4.1% on the cattle side, while we're up 1.4% on the pork side. I use this for a second to remind us that, we've talked about hog prices that have been a little tough as we've gone through 2023. From the cattle perspective, we weren't down 4.1% in cattle slaughter, and we're up something similar to 1.4 on pork. Perhaps we'd be just as concerned about the cattle side of the equation as well.
Scott, I want to take a look at the US and Canadian cattle and hog numbers as we take a look at this report, just kind of because we don't get it and we don't talk about it quite very often. What does it recap and provide, the information it provides for producers?
Yeah, so this is another look at, although we get inventory numbers July 1 for the US, this comes back and says, okay, what also is happening in Canada as well, to kind of give us a little better look at both inventory and numbers for cattle and hogs. So if we look a little bit at the numbers. Number one, let's remember we've got about 29.4 million head of beef cows in this country today, and Canada has about 3.7. So much smaller, but what's the change? So the Canadian beef cow herd was down 1.5% over the last year. That 29.4 million head for the US was down 2.6. So Canada beef cow inventory down a little less than what we would have seen percentage wise relative to what's happening in the US. On the hog side of the equation, so where we have about 6.1 million head of breeding inventory here in the US, Canada has about 1.2. They were down similar to us, so down 0.3% in breeding inventory. And when you look at our June 1 numbers, we don't quite line up here. There's where July 1, ours are June 1. We were down 4.4% relative to the previous year. So similar numbers there. Just reminds me to say both you add together Canada and US, and we get pretty consistent number one, much lower beef cow inventory, and on the hog breeding side, slightly lower inventory relative to where we were in 2022.
On the hog side of things, how does that kind of measure up for us?
I think it reminds me to say, Canada more important to the combination of numbers when you look at sow numbers. One of the things that I'll say does stick out to me out of this report. So if you remember, Dees through May, sows farrowed for us was down 1.4%. For Canada, it's up 0.6% January through June, which just reminds me that there's a little bit of difference in those sows farrowed numbers. Overall, when we talk about pig crop and ultimately what comes into the United States in terms of both feeder and fed ready supplies, it matters a lot more what's happening on the hog side of the equation when you think about Canada relative to the cattle side.
When we look at this, thinking about that relationship, knowing what's going on seasonally right now in the hog industry, but looking ahead to as well, do we get concerned about what that does potentially also to prices and profitability for producers long term?
So potentially, I think yes is the answer. You look at both, and to me, this is a little symptomatic of back to comments I've made in the past of if you build a new hog facility, the investment you have means nothing but except that you're going to produce at 100% capacity in that operation. And then when you're somehow out of business because of the financial side doesn't work, somebody probably buys that hog facility at a reduced value and keeps raising hogs in it. So all this data to me just points to it's hard to get supplies to move lower to negative returns. And that is a very different position than this industry would have been in 20 years ago.
Also out this week, Scott, farm income. And as we take a look at that, there's a really big number that's standing out when we're taking a look at a comparison from the record levels of 2022.
Yeah, for sure. And so I start by just reminding us that USDA did revise 2022 up about $20 billion. So we hit a record farm income of $183 billion in 2022, according to USDA. So let's just understand we're coming off of that very high record. But USDA gave us a 2023 prediction of $141.3 billion this week. That is nearly $42 billion below that record of 2022, down about 23%. And then you start looking at some of the individual pieces of this, and a lot sticks out to me. Number one, cattle receipts are projected to be up $15 billion or nearly 18% in 2023. Higher cattle prices, even with reduced supplies, gives us more total receipts. Yet you look at hogs down 9.8%, Dairy, a $12 billion decline in dairy receipts in 2023 relative to 22. That's 21% lower. So there's no reason why we keep hearing how tough it is in terms of the dairy side. You look at broilers also down nearly 13% and eggs down 32. It just reminds me in some cases of how high 2022 was, and in other cases just how tough 2023 has become.
And to talk about how tough 2023 has become, we're talking about declines in income or declines on the receiving side of things. That's not the same case on the expense side of things.
Yeah, the old cost price squeeze, if you will, seems to be at play in these numbers. USDA told us their 2023 projection for cash expenses at $432 billion. That's up 30 billion from where we were in 2022. So expenses 7.3% higher. Receipts, total receipts, crop and livestock receipts down about 4%. Government payments down 19%. You know, that's how we get a 22% decline in farm income. Now, just to make the point here, 2015 to 2019, if you do that comparison, farm income is up 86.3%. So I don't want to be too negative. It's just how strong 2022 was. I'm not suggesting that 15 to 19 were great years, but certainly still well above that set of years when you look at the 2023 prediction.
I would assume that this really kind of indicates and is a good reminder for your favorite topic to talk about, which is risk management.
I can't believe you would have said risk management after this discussion, but yeah,
I don't know either.
Yes, it's the right time. And by the way, so I'll actually start with cattle. You know, we've talked about higher cattle prices as we've gone through the year. Now's the time to do risk management. When you look at where we sit in terms of futures prices, they're nice in terms of the level of those prices today. So it gives us a better opportunity to do risk management on the cattle side. I'm not suggesting that we shouldn't do it in other species, but I think you and I would have had this discussion about pork in 2022 of, you know, maybe it was time for hog producers to do some risk management because there was downside risk. It's tougher when prices are low to find those opportunities, but hog prices could still trend lower as we look ahead here for the next few months. It is this. And I'll say just, I keep seeing a lot more volatility in these markets than we've traditionally had, price volatility, and protecting oneself from that, some of that price volatility might be a good strategy to stay in business longer term.
All right, we're going to flip the switch, flip the scripts. That's what I meant, or flip the switch. We can turn lights out too. It's Friday. It is Friday on a long weekend. All right. We're going to talk on the demand or the consumer side of things. A little bit of a bright spot in the restaurant performance index this month.
Yeah, that's right, Megan. So the overall level for July was 101.4, which I remind us that anytime it's above 100, that's saying there's expansion, below 100 contraction. So we are talking about expansion. That's after May being below 100, June and July both being above, but July continued to build up 1.2% from June. That was a higher current situation component of the index, also a higher expectation component to the index. You can only really look at the downside being the current situation customer traffic, which came in at 99.4. So we're still seeing some lower customer traffic numbers. That's the only, again, troubling spot. But in general, we're saying that things look better from that restaurant performance index that we got out this week.
On the in the same area, we're also going to talk about jobs and a pretty positive jobs report. This is a very contrasting week for us to talk about on the producer side of things. Not such great numbers, But on the demand side of things, there's definitely some bright spots continuing.
Yeah, that's right. So we got from the August jobs report out today, 187,000 jobs were added. It was an increase in the unemployment rate to 3.8%. When you look back, all right, so we saw Bureau of Labor Statistics making some revisions in both the June and July numbers, which reduced the job estimates by about 110,000. So that was a little bit of the negative side of that revision to June and July data. But the 187,000 that we added in August was about a little more than 20,000 above what pre-report estimates would have suggested. So that August jobs report, by and large, positive in terms of jobs added.
We talk about how this kind of plays out with inflation, and it's such an interesting kind of comparison. But when we think about it, we still have to be adding jobs, or we need to be adding jobs and supporting wages, right, to support demand for product.
Yeah, yes. So we talk a lot about inflation because we know the Federal Reserve keeps targeting 2% inflation, and I don't say that in a negative way, but we know that's the target. And we know if we have inflation occurring at a faster rate than that, it puts pressure on the Federal Reserve to keep raising interest rates. So when we add more jobs than people anticipate, we kind of get ourselves down the road of, inflation is going to be stronger than we thought. May mean the Fed has to push those rates even higher. That's kind of the triangle, if you will, of what happens when we look at these jobs reports that maybe in the past we haven't had the same, if we have too strong of inflation, it just pushes interest rates higher and cools the economy. But we certainly are in that mode right now.
Scott, as we look ahead to next week, monthly trade data, what are you looking for in that information?
So continued, hopefully some strong pork exports, especially to, well, I was going to say non-traditional markets, but newer markets for us on the pork side. And any sign that we can get some stronger beef exports despite what's been high prices for beef and cattle in this country. Those are the two big ones for me.
We've talked, and before I let you go, I'm going to ask this real quick. We've talked about how beef demand is held relatively strong here in the US. It's been a little bit of a different story on the global side of things. How important is that to what happens demand going forward, that we find and we keep a balance of strong domestic demand for beef, but also continued strength or improved strength for beef on the global market?
Yeah, so I often will say the growth and consumption of beef is going to be stronger outside the United States than within it over the next 10 years. So we do need to stay focused on exports. Now, we're pushing record prices into those international markets and a stronger dollar. And so it's not surprising we're seeing, some slowdown, but we don't want to lose focus on the rest of the world as we get focused on what's been pretty strong demand on the US side for beef. We're going to need those international markets longer term. And I think growing new markets for higher valued beef is certainly something we should be working on today, because it takes years to develop those new markets.
Scott, always great to see you. Have a wonderful Labor Day weekend, and we'll talk to you next Friday.
Sounds good, Megan.
So our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments there. Have a great weekend. I'm Megan Grebner for Brownfield.